Welcome back to the channel, TTL Forex. So in today's video, I'm going to show you how you can trade this market successfully so that you can make some profit on the market, right? So what we're seeing here is that the market is selling on boom 1000 index, and you can see that the market has sold for a particular period of time. So if you enter into the market during this position, the first thing that should come to your mind is that the market will buy, right? The market will buy, because if you see that this market has been selling for this particular period of time, you don't want to miss this perfect opportunity. What you want to do is to place a buy opportunity immediately so that you don't miss this good buy opportunity. You place a buy immediately to take the profit from this market, because this market is going to buy. All right, now if you take a look at this point right here, you saw that the market bought until this point, then the spike came through, right? The market bought a little bit, then the spike came through. Now we saw that the market has sold for this period of time, then the next step is for you to take a buy. All right, and the spike that's going to come through on this market is going to be a very big buy, and that's going to result in a lot of profit from the market, right? So that should be a very good opportunity for a buy. All right, so this is one of the best way to trade boom market successfully. The first thing is your technical analysis, right? Boom and crash is based on technical analysis alone and not the fundamentals. You don't use the event or news to trade boom and crash. You strictly trade boom and crash on technical analysis alone and the use of indicators and also price action. So if you understand price action, you understand your technical analysis with your strategy, then you can trade this market successfully. And the only way you can be able to trade this market successfully is consistency. When you get into the market, you consistently get into the market every day, then you learn key features from the market. You become familiar on how the market goes, and always check on your historical trends to see how the market has played before, so that you can enter into the market with a good prediction on how you want the market should go on your end, right? So that's what we're seeing right here. This market has sold. This market sold to this point here, then it's bought a little bit. Right now, what I'm going to do is to put in some indicators on the chart that's going to help us to see how we can trade this market successfully. So firstly, I'm going to start with the RSI. With the RSI indicator right here, we'll look for the RSI, relative strength index. I'm going to put this period on, let's put this period on 12. Then you apply to close the levels. Put here 90 level right here, level 90, right? Put level of 19, then level of 10 for, because that's the basics. Then the style, we are putting in on 3 pixels. Then we're using the color for color red. Then the middle here for this trend line, then click on done. Why the style right here, we're going to put it on 3 pixels as well, while we're using this first trend line here, then we click on done, right? So this is the indicator, the RSI, right? Now you can see how visible this trend line is. Okay, now you see that whenever this trend line curves down to this point, the market will buy, right? You saw that whenever this trend line curves down to this point, the market buys. And if you take a look at this curve at this point, if you trace it up, you can see that this is the candle tick here before the spike happened, right? And whenever the spike happens, the market trend on the relative strength index, this blue trend is always going to curve up, right? It's always going to curve up. Take a look at it. It's always going to curve up whenever the spike happens at that point, right? So now you see that this market has sold. So when the market is selling, this blue trend line is going downwards, right? Then the spike comes through immediately at the up trend of this RSI, right? So we're going to put in the MACD indicator on indicator window 1. We're going to put on the MACD, right? We're going to put the fast EMA on 13, the slow EMA on 25, the MACD SMA on 10, while it's applied to close. Then put the main here on 3 pixels, the signal 3 pixel, the color red and the main color black. Then we click on done. All right, now take a look at it. This is beautiful, right? This is beautiful. Take a look at this trend line, right? This is the MACD. You can see how it corresponds with the RSI. All right, you can see how it corresponds with the RSI. You can see at this point right here. Take a look at it. This is going to be our exit point from this market. Whenever the red line of the MACD crosses above the RSI, the blue line, which is the relative strength index, going to be our exit point right after the spike. So when the market has spiked, when the market spiked on the boom 1000 index, once the market spikes on boom 1000 index and you place your sell, and when the MACD, right, this red line on the MACD crosses above the RSI, this blue line right here, well, we're going to exit the market, because after that point another spike is going to come through on the market, right? Take a look at it. After the spike, immediately there's a crossing above, not below, guys, above. Once there's a crossing above, you exit. After the spike, you see the trend line going upwards, then when there's a crossing, you exit. So to avoid the spike, take a look at this. You avoid the spike. After the first spike, you place a sell. So a sell can give you about 5 to 6 candlesticks successfully on this market. All right, successfully on this market. Take a look at it again. Above there, you see that whenever this red line crosses above at this point, the spike doesn't happen, right? The spike doesn't happen before, it only happens after it, right? So the spike needs to happen before you place a sell on boom 1000. That's all we're at. We're on the boom 1000 index market right now, and what we're seeing here is that this is the spike, right? The spike came through at this point. Okay, now take a look at it. Spike happened here at this point. Here we place a sell after the spike. All right, then you exit immediately this red line has crossed above. Right now, if you take a look at this point right here, this point, the spike just happened, right? Then immediately you place your sell and you exit. And it also depends on where the market position is, right? It depends on where the market position is. Now this strategy will work perfectly if price is at the overbought zone, right? This strategy will work perfectly if price is at the overbought region at this point, right? But if price is at this point, meaning the market has sold up to this point, you know that the market need to buy again, right? Because there are too much sellers right here, so the market need to buy again. So if you, for example, now we're seeing that this is the downtrend of the MACD, right? So you want to place your buy at the uptrend of the MACD right here. This is when it always crosses above the uptrend of the MACD, and that is a very good opportunity, right? A very good opportunity. Okay, now the spike happened at this point. Take a look. Here is another point here, right? So immediately there's a crossing, you exit. All right, immediately there's a crossing, you exit. But that doesn't mean that the spike won't come through before you exit. The spike can also come through before you exit, right? Meaning that before this red line crosses above this gray line, the spike might still come through, but it will be a small spike. I hope you understand what I'm saying to you guys, right? So like I said, you need to understand price actions as well to implement this strategy perfectly, because once price at this zone, this oversold zone, the market is going to buy it. So I believe you understand what I just said to you guys. Now we're going to go over to the crash 1000 index market. Remember, we're doing this on crash and boom, and we're using the same setup for crash and boom, but you know that the crash and boom market is a little bit different, right? So on the crash market, when the MACD red line, which is this red line here, crosses below the RSI, which is this blue line, when it crosses below, we exit. Right now, you place a buy after the spike. When the spike will come through, the spike will gonna come through when this red line crosses this blue line here. When it crosses the blue line, that's when the spike is gonna happen. Then you place your buy. Then when it crosses below, you exit after that, so that another spike doesn't come through. Right, you can see at this point there was a spike, immediately there's a crossing above, then you place your buy and you exit immediately there's a crossing below, and you take the profit. Although the spike might still come through at this point, after this first crossing, spike might come through, right? You know, there's no 100% strategy. Spike might come through, but you know, it won't be that much of a spike, just like it happened here. Take a look at this. At this point, you saw that after this big spike, right? After this big spike, then there was another spike right here, cutting away the profit which you have made. Now this is a 6 candle profit. Take a look at it. It took away all the profit, but even though it took away the profit, we still made another profit, because if you had placed a buy at this point and the spike came through and take away all the profit, you still got another profit, like about 3 candlesticks before the crossing below. Here, 3 candlesticks before the crossing below. Take about 4 candlesticks. You see, you exit after 2. After crossing below this blue line, you exit after 2. Right, after 2 crossing, you exit after 2. So this is a very good risk management technique when you're trading the crash market, right? Like right here, you see after the spike came through, you place your buy, then you exit after like 2 candlesticks after the crossing below. Right, after the crossing below this blue line, you exit after 2 candlesticks after the crossing, so that the spike doesn't come through. So even though the spike came through and took away the profit which we have made, you still made another profit again, right? You know, the crash market is highly volatile. That's trading for you. You make profits, you make losses, right? But with a strategy like this, you can count more of your profit than your losses. So there's no trading that you say that you're trading, then you didn't make any losses, you made profit all through. No, right? That's not true. When you're trading, there's going to be losses on the markets, right? But you're going to make more of your profit. That's why we're using this strategy, right? That's why I'm using strategy like this. Okay, now take a look at this. This is the overbought zone, right? This is the overbought zone, and the spike just came through immediately. The spike just came through immediately. The red line crosses this blue line. The spike came through here. Take a look at it. At this point, you saw that when it drops down, it went up. That's when the spike came through. So if you say you want to catch a spike, what you do is just wait until the red line crosses this blue line right here, and the spike is gonna come in. Take a look at the spike right here. So you wait. If you want to catch spikes, when this red line crosses the blue line, the next option is gonna be for a sell. Here, take a look at it. Trace it down. Here you see right here again, trace it down. You see that after it crosses, the next option is for a spike, and take a look at it. The spike came through just as it happened here. The next option is for a spike. So this is a very perfect strategy for you to catch spikes on the market, right? A very good, awesome strategy for you to catch spike on this market, right? So like I said, if you want to take your candlesticks for about 4 or 5 candlesticks, you wait. After the spike, you place your buy, right? After the crossing below the RSI, this blue line, you exit the market and you wait for another perfect opportunity, right? So I believe after watching this video, you understand what I've just said. Then if you found value in this video, do well to like and subscribe to the channel, the Daily Forex. For more awesome trading tips and strategy, I will see you in the next video.